Hi, everyone. Welcome to Shareholders Talks. And today I am very, very excited to have with me Anirban Mahanti, who I spoke with the other day. And I thought, since we didn't have the opportunity to chat when I had a conversation about how Shareholders thinks about share investing, we didn't have an opportunity to chat about a stock that we are both very passionate about. We both own the stock. We are both self-confessed Elon Musk fans. So from the outset, we've put all the cards on the table. This is designed to be a conversation that is general in nature, information purposes only. We are not advising anyone to go out and buy the stock tomorrow. You need to do your own research. But I always think that Tesla is a wonderful example of how the world is changing. It's extremely controversial. And as Anirban knows, my first chapter of my second book actually uses it as an example of how I see the world changing. So welcome. Thanks so much for joining me today.
Thank you for having me. And I'm going to just preface by saying that if people hear loud noises in the background, that's rain with like cats and dogs and whatever else you want to think about it. It is really raining hard here. So apologize for any background noise.
No, don't apologize. We'll be probably getting it in the not too distant future as well. So I thought the first question I'd ask is, do you own the car? Which I think is quite important because I don't own the car. I can only afford to buy the shares. But the second thing is I wanted to touch on like how fabulous is the car and just your impressions about the whole Tesla brand.
Okay, so this is the first question. I love the first question. So I do own the car. I have a Tesla Model 3 Performance Edition. I got it in 2019. And I put in an order in 2016. I put in the order the day they unveiled the car. I was not crazy enough to go and line up at Martin Place, but I did put the order in online, paid my $1,500 or $3,000, whatever is the deposit, I can't remember, and let that sit for 3 years because the car arrived in August. We were, I think, the second batch in Sydney to get the car. I think the first batch arrived in, mine came in September. First batch, I think, came in August or July, August. And then, they said, yours is coming. Very excited. We were all very excited. It was a great thing because the whole family went to Alexandria to pick up the car. It was quite the thing. And, they were like doing like every 6-7 minutes, they were delivering a car. We were all very excited to have the car. I've been a shareholder since 2013. So I've been following this company for a long, long time. It has done wonders for us, and I think it has taught me a lot about business. So I love this company, and I think the founder is just, and founder and CEO is just a fantastic person. He's got his quirks. Every human being has their quirks. How is the car? Okay, so I've had a lot of experience with this car in the sense that I've had this car for now 2 years. I've driven about 27,000 kilometers. I've had an accident on the freeway of somebody actually rear-ending me. And what was fascinating about the rear ending was because, the other car was significantly damaged. Mine was barely damaged. So we've been in an accident and seen how it is. We've seen the service post-accident. It's actually, people complain about service with Tesla. It was okay. The parts take a while to come, but everything is very well organized and they make sure that you get to the best place. My car got repaired at a place which repairs Porsches and some other famous cars. So they make sure that you get your car repaired at a great place. So I had a rental, a pretty nice rental. I won't name the company. I don't want to tarnish another brand. But for the entire 3 weeks that I had this beautiful rental car, I was just thinking, when can I have my Tesla back? Because no other car is as much fun to drive as the Tesla is. The 0 to 100, my dream, as my wife says, this guy is just looking for the red light. I mean, how many times do you actually want a red light? I want the red light and I want to be the first car on the red light. It is just so much fun. If it's in the 80 zone and you're the first car at the red light, it is just so much fun to see all those cars fade and it never gets old, and all of us, my daughter and my wife, all love it. It's just fun. It's a great fun car. You can play games inside the car, like if you play beach buggy, the best way to convince someone to buy a car is to tell their children to play beach buggy on the car. You know, and they're like, it's just fantastic. You use the steering, use the brake, and you play beach buggy. It's a minimalist design. And I think if you come in with the mindset of a BMW, which is very rich in the interior, or a Mercedes, it would be shocking to you. And maybe there are panel gaps and stuff. I don't notice them. But the thing is that the experience of this car is so good. The driving is so much fun. And actually, most of the time you're not driving. I have autopilot and I've got FSD, the software package for whatever it does.
Really?
On Hume Highway, you know, it'll enter and exit on its own. It'll change lanes on its own. You know, you just have, it's like having a co-pilot with you all the time. It's just fantastic. And I have the lights and stuff detection. So I'm mostly on autopilot. 90% of the time I'm driving an autopilot. And this is the other reason I missed my car, was that the other car actually had to drive. That kind of can suck sometimes. Excuse my words, because you're in traffic. You don't want to drive the car. You want the car to be doing the driving. You want to just sit back and watch and take intervention, you know, do an intervention if you need to. So it's just an experience. Then I'll just say another thing about service, right? So these cars don't require much service. The only service I've had really is a tire change, or not tire change, but tire rotation. Tesla came to my garage and did the tire rotation for exactly $52.80. I bet it cost them money because they had to send someone in a Model S, modified Model S, to come to my garage and then spend 1 hour doing this. That's insane. And I've tried, you know, a couple of, so I've had, you know, I put in a request for a review my range because I thought maybe there's range degradation and things like that. It's brilliant because they can, and I had some other issue with, you know, got a software update and my screen was blanking out. So you put a request for a mobile service, but what happens is the technician from Alexandria or wherever in California, they can log into the car and actually you can check it and then they can give you advice. Both my problems, you know, were addressed remotely. They just called me and within 24 hours. So, you know, people, if I think in Teslas have an issue with service, if you get into some parts issues, and I think there might be issues with the lower volume cars, because again, you know, they're lower volume, right? I mean, when somebody buys a lower volume car, what I say is that, well, with the Prestige comes the pain of taking that Prestige. If you buy a car that is made only 100,000 output a year, you're going to have some other issues with that, but nothing with the Model 3. I would bet the same thing with the Model Y. It's great. It's fantastic.
You've covered so many points, and just I was thinking along the way, it's like, oh, I've got a point for that, and I've got a point for that, and I've got a point for that. And the one that we chatted about before we came online, I think is really, really important. And it's the fact that you actually put down a deposit for a vehicle, sight unseen. Maybe they had one of the demo models, I can't remember, in Martin Place. And people have done that, have flocked to that. They're doing the same with all the models. And today I saw in the very luxurious AFR Weekend magazine, the new electric Audi e-tron whatever has a double page spread on the first inlet page of the AFR magazine, which would have cost a fortune. And I think the thing that people don't really understand is that marketing has always been such a huge thing for prestige cars or new brands. And here is one that literally people trip over themselves to get the new model, like the Plaid. And when you talked about the excitement of going off at the red light, I was following someone on Twitter who's got the new model Plaid. And he goes, the police were even excited when he was next to them at the lights. They all started pointing at the Tesla going, this is the fastest road car on the planet. And this guy has it. And I think it's one of those things that I don't have a Tesla. I've been in a Tesla. I've listened to bankers who were given the chance to go in the Model S, and they talked about it like, you know, this is the most incredible thing. But it is very much, it's hard to understand the company unless you've had that interface, that experience. And I think that's really, like, we all get the iPhone, we get the Apple products because we all interact with them. But for people that don't understand how a company that's barely 20 years old can potentially surpass the incumbents, it pretty much comes down to your synopsis and just a couple of points I've made. I don't know. Do you agree with that?
I do. I think the brand power is enormous. And I think, yeah, it requires, I think the only thing I'll say is that we don't need to physically even embrace the product, because you could look at some signs, right? People camping for iPhones is a sign that there is brand power. People standing in line outside Martin Place to sign up so that they can be the first ones in the queue ahead of those people who are going to get it online to get the car. That's brand power. No marketing spend, and yet so much chatter about Tesla is brand power. Elon Musk coming on Saturday Night Live where competitors are advertising their electric cars. That is brand power. So again, I think I would never, Musk is not just a technical genius, but he's also a marketing genius. I mean, there is just something about, and it's a great product, as you say. I think it's a great product, and there's a great marketing behind it.
Yep. Yeah. Fantastic. Well, let's try and move on to some of the more operational parts, which is obviously the fact that Musk is trying to achieve something incredible. He's touted 20 million vehicles by 2030. I don't know what your forecast is, but probably somewhere some people forecast 8 to 10 million vehicles. But I wanted to touch on the concept of operating leverage and return on capital employed. And probably it's good if you give us some of your thoughts there, because the incumbents, just by way of comparison, I think they're running around 7-8% return on capital employed for the majors. So whether you're looking at, the Toyotas or the VWs, and Tesla already has been registering, I think you were saying, Anirban, about 17%. Somebody on Twitter was talking about 23%. But the whole concept of rolling out these new gigafactories, and obviously massive billions of dollars being sunk in there. But once you get that volume and scaling of production, the thing about Musk is he wants to produce the best manufacturing facilities in the world with the lowest costs, which will give him the scale not only to accelerate his own margins, but be able to cope with a lowering of the average selling price over time. So maybe you could give us some of your thoughts around that operating leverage, return on capital, and how you see, the leverage going forward with the cash flow coming potentially out of this company.
Yes, that's a great question. So, return on invested capital, basically people are calculating, sort of looking at the operating income and multiplying that by 1 minus the tax rate to basically get a feel of how much returns you're generating over the invested capital, which roughly speaking is basically how much shareholders have put in, how much debt holders, how much debt there is roughly. Again, this is roughly because the calculation is complex. And because the calculation is sort of more involved, the numbers you get are going to be different for different people, slightly different. And depending on what sort of adjustment people are making. For example, as we were talking, debt, there's debt that's recourse debt, which is debt taken by the company, but then there's vehicle financing is that debt, because that's recourse to the vehicle, not to the company. So how do you account for that? Those sort of changes. But I just did a very basic, my thing with these sort of calculations is I never try to make these calculations perfect, because I'm a believer in all models are wrong. And because a model by definition is, and again, the calculation is correct, right? Yeah. But the thing is, what do you want to get out of the model? Yeah. And the whole idea of calculating here is to see how much returns you're generating and then get a trajectory of that return. So just a rough calculation for 2020, it was about, I think about 9% is what I got, a 9 or 10%. Or if you look at last 12 months, it's already up at 17, 18%, somewhere in that vicinity. That's climbing pretty quickly for a company that's very young. And my good friend, or I'm not calling him a good friend, but someone I know very well because I interviewed him, Mayur Thakur, who's the person who put out the tweet, and he's a CFA and he's done detailed calculations. So I'm not going to even question his calculations. But Apple is at 42%, according to Mayur, and that makes sense because Apple is buying back stocks, and invested capital is basically going down, and they're generating enormous profits. So the denominator is down, and you can see it. But I think this is interesting because basically, I think the key takeaway is, so the best comparison is Amazon. Unlike Unlike Amazon, which would have lower return on invested capital at a similar point in time, actually Tesla is on an Apple-like trajectory. And I think that is important while being a capital intensive business, right? And you can see, and if you don't want to do it that way, I was just, before I thought I'll prepare for, because I keep forgetting these things. I pulled up the Q2 slide deck, and you can look at it in many different ways. And actually Tesla has a very good slide deck, and they make things really easy for you if you want to find information. So a couple of different ways to look at it. One way to look at this is to just think about the free cash flow generated by the company on a trailing 12-month basis, right? So this is cash from operations minus CapEx. Yep. And remember, the CapEx for this company is for growth. It's basically building new factories and putting in new equipment so that you can build new gigafactories, right? So in last 12 months, trailing 12 months, the free cash flow for the company was $4.2 billion. Okay, $4.2 billion. So roughly, another way to think, the company has a market cap of 800. So we're paying 200 times free cash flow. Sounds high, but how do you know that we're getting leverage is by basically just go back a year and just look at Q2 2020, and the free cash flow was under $1 billion, right? It was 907 million. So you've gone up more than 4x, right? And it doesn't matter what metric you look at, you're looking at free cash flow. So this is a company that is actually generating money. It is generating cash. It has net income. And again, net income is fungible in my opinion. So that's at least what I believe in. Free cash flow is really the real thing that that matters. Yeah. And another way to look at it, if you want to see whether or not there is scaling that's happening, is to look at net cash available from operating activity. So how much cash is this company generating from its regular operations, not financing, not hanky-panky stuff. This is just from operations, right? So it generated $9.2 billion over the last 12 months. So now we're thinking about a company that's actually selling for less than 100 times operating earnings. But how much is that up if you compare that with Q2 2020? Q2 2020 was 2.7 billion. So you went from 2.7 billion to 9.2 billion. So that is operating leverage, right? Basically the business is scaling, and between those 2 points, it's not that the revenue went up by that factor, right? So that's scaling. So revenue grows 100%, but if your operating profit or cash provided by operations or free cash flow that grows at a faster pace, that is operating leverage. Yeah. And I'll just answer this part next is why is it happening? And an easy way to think about this is this company is basically putting factories initially, and its factories are designed for a certain space, a certain run rate, right? So let's say the installed capacity right now is about 1.1 million, but the company is not producing that many cars yet. Right. So, and there are reasons for that. It is, that it takes time to scale things up. They make changes. They need to build, new machinery for that and so on. But most of the cost is in. They have the labor is in. They just need to probably add extra shifts, which is going to cost some deltas. It's not pure leverage like a software company, but there's a lot of leverage because the big costs are in. So we are producing, say, trailing 12 months, maybe we're at 700 million odd vehicles, but the capacity is to produce 1.1. Basically, when you get that, you will get at scale. Another thing to remember, and this is my last one, I'll hand it over back to you. I talk too much. I know.
Not at all. It's fascinating.
The other point I'll say is that 1.1 million that I'm saying is roughly the capacity is basically Shanghai. So this is Gigafactory Shanghai, Gigafactory Fremont.
Yep.
Right. And that's really it, right? Yeah. Shanghai and Fremont is what we are talking about in terms of their installed capacity, because the rest of it. So if you think about California and Shanghai are the only 2 factories they have. This does not include the capacity for Berlin and Texas. We don't know actually what they're budgeted, but most of the construction that has, Berlin is nearing finishing line, right? So they're doing the capex for that. Just imagine how much more leverage there is. So yeah, I think looks good to me.
Yeah, no, I'm with you, and I think that's right. People just don't quite understand because It's if in the case of Ford, they expanded aggressively overseas and invested heavily, and it was just a terrible failed story. So they sunk all this capex that became basically sort of stranded assets that were loss making that they had to write off. So in the case of Tesla, it is up till this point in time been a demand driven, but it's been a supply constraint. And it will probably continue to be a supply constraint with all the tailwinds sitting in there. And I guess because we could probably, obviously you've got Giga Berlin, Giga Texas coming on board, and we've obviously got the, are we talking the first quarter results coming out? I think, yep. So they'll be out probably by the time the podcast goes live, which the numbers I've heard as high as 250,000 for this quarter. That's production, not delivery. But you're absolutely right in terms of that leverage. The one thing that is probably the most controversial that you touched on, which is the autonomous driving, or FSD as it's called. And that is not really booked in earnings at this point in time, I don't think. A lot of it is kind of, being held back at this stage. But so do you feel like some people say there's only, obviously Kathy Wood's the big one out there, if you want a $3,000 price target on the stock, you are talking the development, the full-scale rollout of an FSD that's got regulatory approval, of people turning their cars, and maybe you could tell us whether you would ever turn your car into a robo-taxi. But the whole argument is that you're moving from like a hardware producer like Apple was, who's moved into the software space. And that is kind of that huge potential unknown with Tesla, if they can actually develop that software as a service component with FSD. So I'd love to hear your thoughts on that.
Okay, so that's a very involved question because there are two parts to that question.
Yeah.
If I'm trying to tease it, one is about FSD, another is slightly related to valuation. Okay, so I'll clarify the first part before I go to the second part. So with respect to valuation, I would say that I think Tesla shares are probably undervalued today. Just if you think of the vehicle production. That's my thinking, because you have the kind of leverage that you're seeing being generated. So you're paying roughly, let's say, under 100 times operating earnings, operating income for this company, which is still very early stage in terms of where it can be and in terms of its product roadmap, right? So I think we don't actually need FSD to justify market-beating returns. That's in many ways, Tesla is actually the lowest risk stock to own because of that reason, that this company can win in multiple different ways. So that's one. Number two is FSD. So I have mixed feelings about FSD in the sense that I was of the opinion that I think this is almost like a done deal. Based on how the car was improved, my experience in terms of what the car was doing. So when we got the car first, and I didn't have FSD right away because I took FSD as an add-on later on. And initially the lane changes were very, very abrupt. So it was not human-like, and over time the car has become very human-like. So you can see, and it's hard. It's like a child growing up. You don't realize how much the child is changing because you then look at pictures, and I go and look at my iPhone photo library. Then I realize, oh, this is how my daughter looked, and this is how she was, and you remember that. So you don't have that memory filter with the car, unfortunately. But if you really think back, car has dramatically improved and changed. Right now, I can do city driving autonomously, partially. Yeah, but I think the edge cases are really hard. Actually, this is what I think is the challenge. So if I had to assign a probability or something, I'd say 60-odd% chance that Tesla would get there before anybody else gets there in a at scale scenario. The thing that I worry about, this is something that Musk talks about, is what he calls in engineering terminology, this is like hitting a local maxima. So you can design a solution that is optimized for a particular environment, but then it doesn't scale globally. It doesn't work more globally. And
doesn't work for kangaroos.
Doesn't work for kangaroos, doesn't work for this, doesn't work for that. And I think what they're trying to solve is the higher, bigger problem, is trying to find global optima. And I think that's a much harder challenge, but I think that's the right approach. So I think they can get there. My guess would be that they might have to, add, maybe upgrade the cameras, the quality of the cameras that they've got. For example, as an example, maybe they need to change the FSD computer that they have in the car. Most of these things can be done because it's not that hard for them to actually upgrade the hardware. So it's a question of, I think they can get the software there, largely because they're collecting insane amounts of data and iterating over that insane amounts of data. And I think what they can do is they can do a combination of labeling of the data, and then they can do like what is known as semi-supervised sort of learning, where they can learn based on unlabeled data. And then they can have this feedback loop with these FSD beta testers, for example, where every intervention is basically something went wrong, and therefore you need to look at it, and then you can keep iterating until you get there. So I think they have a good chance of getting there, but they might need some hardware updates there's rumors that they're already working on hardware 2 or 3 or whatever it is called, or 4 for the chip. And the new vehicles will of course have them, and the older vehicles will have to get an update. That's my guess. That's the best guess. But I think the other way to think about this is that if they can't get there, nobody else can.
Yeah.
Right. Yeah. And then if they get there, I don't know how the others are going to
get there. Yeah.
Get there. So I think the fundamental problem and I guess the other thing is that there is this potential for regulators to actually put a block on the potential for getting there.
Yes.
Because I think there's no other way to get there but to get there the way they're doing it, which is by basically having a beta software being supervised by someone who's driving it. Basically, you're saying, well, you're a driver, you can supervise the software. And that's really the only way to collect data at scale. And, so now the regulators said that you can't do that. Then basically they've killed autonomous driving at scale. It could just turn out, if that happens, it happens in a certain country, then some other country might say you can actually do it in our place, and it might become a geopolitical thing, saying that China might say, okay, fine, you can do it in here, or Europe might say you can do it here, or whatever. Somebody might and then you might land up getting some solutions which are maybe region specific, and maybe they have region specific anyways. In terms of how they train it is really my guess.
Yeah, but no, that's a really good point. That's a really good point, because people forget how sensitive the car industry is politically. And we've seen it recently in America, where Tesla has not received potentially the same EV credits because it's non-unionized workforce. And someone put forward the proposition, I think it was your friend that you interviewed, that why he doesn't go for potentially 20 million cars if they get there by 2030, let's say, is that the incumbent governments, Germany, Italy, Japan certainly, like Toyota has been really, really quite resistant to going down the track of EVs, apart from the fact that they've sunk so much money into the hybrid version. And it's because they employ people, they come with a national brand, everybody kind of relates to them. So they are politically sensitive. And I think the point about FSD is really interesting. It may be certain states in America that are prepared to let it continue to be tested, and then other states not. So certainly one to watch. But there was one interesting statistic that about 35,000 to 39,000 Americans die on the roads each year. And somebody put forward, if the autonomous FSD driving software could get that number down to 90% not occurring, but you're still then going to look at a few thousand deaths a year, and no one will look at the positive. It'll just be the people that were impacted. And I think that's the sensitivity of what they're trying to achieve. And it makes sense intuitively. I'm no engineer, but if you have real life examples of people driving, I think Elon Musk said, the stuff we see you couldn't write about. when people driving a car. And that's the thing about the cameras tracking the live data. It is the only way to do it, because as a software engineer, you could not possibly envisage all the situations that actually come to pass. That's kind of how I see it in my, simplistic way of looking at it.
No, that's, I think, absolutely fine. And I think that
Yeah.
makes sense.
Yeah, exactly. And that's actually what happened with the Boeing aircraft with their new software systems that they had. They really hadn't sorted it all out. I'm just trying to remember, because we could go on for ages and ages, and we could discuss I don't know, what topic do you think we should take? Because we've got the 4680 battery and that coming online. We've got Cybertruck. We've got the cheaper electric vehicle that he wants to put out. Or we could tackle something like succession risk to the company. Or you could have a little bit of a selection of all of them.
Well, I think all of those topics are really great. Let's try to do each one of those relatively quickly, right? So we can start where you want. Where would you
Why
want
don't we
to
start with the batteries? Because I love battery day. I was actually gardening in my former garden, and I've got it like live streaming on my Apple phone, and I'm listening to all this stuff. Probably didn't understand half of it, but I go, how cool is this? I am watching a live streamed event about these amazing new batteries. So why don't we start there?
Yeah, so I think the battery stories, I think what they're saying basically is there is some improvements that you're going to make in battery technology, which will bring the cost curve. So basically kilowatt hour versus dollar cost that it costs to generate that kilowatt hour capacity. I think that's their game. And I think they're thinking that the industry is not moving fast enough, which is why they're moving towards doing this. There's also this issue that, as you were talking about, limitation in terms of, they're limited not just by production, but also by, as you were trying to imply, by cells, basically. So the need to produce some of the cells is that they can't keep up with the demand. So I think that has a high probability of being a success. And over time, you would expect, just like everybody else makes lithium-ion batteries, right, with different formulations, and I would think the rest of the industry is also going to follow them over time. So it's not going to be like that they are the only ones. I think the advantage these guys have versus the other incumbents would be that because there's all this new stuff that they're building versus the other people have got a lot of dead assets that they would have to retrofit to make it work for EVs. I think that's where the problem is for the
incumbents.
Incumbents basically have got what exactly as your word, stranded assets, right? Ford is, for example, closing its plant in India, because they can't make money. So I think battery is going to happen, and that's going to further push the cost curve down, which takes, I guess, to the second point you were making, which is the other vehicles that they can do. They can't do some vehicles right now because they just don't have enough batteries, and the cost is high, still high. So I think batteries related to scaling in this case in multiple directions is how I look at it.
Yeah, and I think that's a really good point. The other thing that I always think that is worth highlighting is the fact that you can do prototypes. Elon Musk talks about this constantly. The prototype is not the problem. It's actually scaling it and making it the mass production. And I think that it's very easy for us to sit back and go, well, it must be easy. But it is anything but that. And I guess we've all got so used to the existing manufacturers being able to do it, not in electric vehicles, but within ICE cars. And I think time and again, that is the potential risk to the incumbents. I was reading VW. Someone said they're going to surpass Tesla in terms of EV production by 2023. And I'm like, really? Well, given the examples that we're seeing with the Chevy Bolt and the problems with, has Ford had any problems yet with theirs? The Mach-E, I think they've had to recall, both of them had to recall all of them, haven't they?
Mach-E has huge software issues. I mean, the Bolt one that you put up is a great example, right? So GM has been in this game for a long time. The problem is that their batteries don't, have been burning down, right? So that is a small problem, right? So, I mean, I think that's the problem, right? See, I think it is easy to say that, well, lithium-ion batteries have been existing for a long time. But I think putting everything together, making it all work seamlessly is hard. And then scaling up is hard. And that's hard because the best engineers, well, if you are today an AI engineer, top flight and you want to see stuff deployed at scale, where do you go? You go to Tesla, right? That's the holy grail of, like, they are solving the hardest general AI problem that exists, right? That's where you're going to go. If you want to design battery cells of the future that go into EVs, where are you going to go? You're going to go to Tesla. That's the problem. I think that is the self-fulfilling sort of thing that's going on. Everybody else gets the tier 2s and the tier 3s. And then when you start hiring tier 3s, you've got a lot of problems.
Yeah, quite.
So, and that's why I think the scaling part is hard, right? Again, you can build a prototype because you don't need a whole army of really smart people to build the prototype.
That's a really good point. I hadn't actually thought of that, because there are shortages of engineers because it's not a sexy thing to do. And it's incredibly complicated engineering. We're right at the forefront of so much of this stuff. And I guess the thing that people always say to Elon Musk's compensation package and succession, and I don't know.
Yeah.
If you're changing the world like he is.
So the succession plan, I think that's a big question. The compensation plan, I think if Tesla, I say that if Tesla works out, and Tesla is already, I haven't shown that it's working out. It's got, it's a net cash company. It's generating cash flow like anything. It's scaling. It's high demand. I think Tesla is working out. I think this has the potential of being the largest company on the planet Earth that we have seen. In terms of succession, but those are big boots to fill, right? I mean, who is, and I think so this is probably the one place where I'll ding Tesla. Versus in the closest competitor to Musk in terms of vision and charisma and everything, it'll be Steve Jobs. There's nobody else that comes close. One of the things that Jobs, and maybe Jobs did it because he had an existential risk to himself. So if you've read it's just, this is a good book reference to read, Creativity Inc. by Ed Catmull, who was one of the co-founders of Pixar. And this is an excellent book because this covers the story of Pixar and the story of Disney. Pixar was sold to Disney because because Jobs had cancer. So Jobs knew that he had less time to live, or he potentially had less time to live, and he wanted to ensure the future of Apple and Pixar. Well, how do you ensure the future of Pixar? By selling it to Disney, right? So this is an excellent book to just understand the dynamics. But one of the things that Jobs did very well was he had a bench, right? Phil Schiller, Craig Federighi, Johnny Ive, then Tim Cook. And Tim Cook has continued that. If you look at any Apple product launch, so many people come on, and each one they can stand their ground, right? Johnny, I cannot pronounce the last name, but the guy who leads the chip, that was the guy that the Intel wanted as their CEO, and I think this is one department in which I think Elon Musk is weak. So I haven't seen him try to groom a tier 2 or just a tier below him. I guess I forgot the name, Drew Belligno. He's the guy who took over sort of the role that the former CTO had. I forgot his name now. But he was co-hosting this fellow was co-hosting, Drew was co-hosting the Battery Day. So I think he is a potential, but he's very young, and I think Tesla's got a fantastic CFO, so that is great.
That's the guy who's going to do the conference calls, isn't it, for the quarterly results? What's his name? Begins with K.
Zach Kirkhorn.
That's right. So exactly.
Kirkhorn is a fantastic CFO, and he has I think figured out a great working relationship with Elon. I think what Tesla really needs at some point very soon is someone who can be the Tim Cook sort of Tesla, and it needs the Craig Federighi and type of people. I think that is really needed at this stage. That's kind of missing at Tesla. And the person who left, I thought had who was the president of vehicles.
Yes, I remember that. That was a big loss, apparently.
Julian Jerome. I was thinking that he's being shaped up to lead. So I think that's something. I think that's a weakness, definitely. I think that I would qualify that as as a weakness. But on the other hand, I would say that, there are companies like, did we really know who would take over from Jeff Bezos at Amazon? We didn't. Did we really know that, Sundar Pichai or Satya Nadella are worthy leaders of leading two of the
Microsoft.
largest companies on the
Microsoft
planet?
and Google,
Good. We didn't know that. So maybe there is a bench strength and we just don't know about it because it hasn't been advertised. And, I think one of the tendencies we have is, so this is the other point, we have this tendency of comparing Tesla with Apple and then trying to sort of draw these parallels and everything should seem similar. It could be somebody like, like Nadella was behind the scenes person. There's probably plenty of Tesla's got behind the scenes engineers, as we saw in the autonomous day, as we saw in the battery day, super smart people. These are like, really clever people. And then of course, Andres Karpathy, for example, he's like, is the god of AI, as I call it, god of machine learning in many ways. So again, they've got plenty of smart people. Who has the leadership skills? They probably know. They probably have a succession plan, which we just don't know about. So that's the other side.
And I think that's really fair enough, because there's been lots of examples of companies over time that have been incredible companies and the CEO has left. And I think just the case of Tesla is just because you've got such an enigmatic, eccentric CEO. But, just watching his work on SpaceX and everything, he must have an incredible team at Tesla. I mean, he must, because you can't actually be building 2 gigafactories on opposite sides of the Northern Hemisphere and doing everything else that they're doing, unless there are other people, I think, in there. But as you say, it just hasn't been promoted. So maybe with Elon stepping down now from the quarterly calls and maybe taking a bit of a back seat, it is the start of that transition to maybe let some of the others bubble up from the surface. Gosh, I think we could go on for ages. You've done an amazing, amazing job. We haven't cited all the negativities, and I don't know what your view is, but to me, one of the reasons people don't, there's a psychological block with Tesla because they just can't get their head around the valuation and what is it's actually going to happen, etc. And I guess they always talk about it on Wall Street, that the analysts you're a motor vehicle analyst for an ICE manufacturer, or you're a software analyst. And Tesla is such a hybrid machine of stuff that it's very hard to find analysts that actually cross over. And the guy from Piper Sandler is very good. You know all the names, you follow them as well. But do you think, as a final wrap up, is that one of the biggest problems, that the street in this example has probably been slower to understand Tesla than the retail market, the investors, the yous and the me's?
So I think I'll answer that. Actually, I've had discussions with many colleagues who would be pretty anti-Tesla or not understand why it's an invest. And I think there are 2 sides to the same story, right? And I think the one thing, I guess I'll put it this way. I think what happens is people, and this is a psychological bias. In the long run, if we go to a steady state, in the long run, Tesla might trade at a 15 times PE, just like every other auto vehicle.
Yeah.
Right. But the question is, the journey from now until then is where the money is going to be made.
Yeah,
right?
exactly.
So I think what happens is people go to the steady state and they forget that the steady state might be 50 years from now, when all the vehicles are EVs. And then the other assumption I think there's a tendency for people to make is that so here's another argument, that everybody's going to make EVs and all the EVs are going to be the same. But that makes a very basic assumption of what I call static innovation. It assumes that there's going to be nothing that's going to change at Tesla's end. Right. So you're assuming that these people who have hired some of the smartest people, exactly as you said, right? I mean, how are they operating all these things, doing all these cool vehicles, probably have some other vehicles under cool development, doing a Tesla bot and whatnot, doing Dojo. You've got some of the smartest people, right? So they're constantly innovating.
Yeah.
The smart people are hiring other smart people. There's a lot of stuff happening in the background. So you think all of a sudden that's going to stop. It doesn't work that way, right? I mean, and you take a simple example. Look at the iPhone 7 Plus, where I think the portrait mode came. and compare that with today. Smart companies have what I would call the MVP, the minimum viable product. They'll throw the minimum viable product out. They probably have a roadmap that you can't think of.
Absolutely.
and they're working on that roadmap. And, and they just keep iterating on the roadmap, and that is fine, right? At some point, Tesla will iterate, and that would also be fine. And and by the time Tesla is trading at 15 PE in the long future, far away future, many of the Ice Age automakers, I love to call them Ice Age, it sounds really cool, they'll probably be extinct.
Correct. Absolutely.
Right?
Yeah.
So, I think that's the cycle of life. And I said, you have to watch the journey, and long-term does not mean forever. Nobody's going to live forever. It's okay.
Yeah, and I think you hit the nail on the head. And I think that the CEO of VW is fully aware of the challenges that they're up against. He totally understands that. And the same would apply to the market share. People get fixated about Tesla's market share. And you kind of go, well, if the whole EV market, if we've got to transition the whole of our, how many billion cars on the road to electric vehicles, well, by definition, there's enough room for more than a couple of players as there is currently. And I actually spent, not that this is designed to plug my book, but I spent a lot of time trying to explain to investors that as you move through that S curve and as you have this tremendous growth, it's like, you made your money potentially in companies like Amazon and Shopify, let's say, a while back. Like Amazon is now it's growing, but it's highly mature, and it could, if it wanted to, pay out more of its cash flow in terms of returns to shareholders. It just chooses not to. Apple has so much cash, and you made the point, they're now doing share buybacks, they're paying dividends. I mean, either they can't find where to put all the cash flow, or they've decided to move to a more mature business model. And the only thing that probably has stopped the compression of the Apple model has been the software businesses and those services that have come online. And I think that's what people forget. We can't compare what Ford was, because Ford wasn't a public company until the 1950s, and we didn't have the data. But arguably, Henry Ford was probably making money hand over fist. And if he had gone and privatized it, he probably would have privatized it, for 50 times earnings as well. But we just don't have the example. And I think that's the problem. Tesla is such a game changer of a company that it's very hard for people to find a precedent, particularly when it's almost, 130 years ago. Anyway, that's my 2 cents worth. Anything else you'd like to add before I say goodbye and have a lovely, lovely weekend?
When you speak with an author, it's very difficult to have the last word.
Oh, don't be silly. You're meant to be the guest, so you have the last word.
No, I'm completely fine accepting that the last word that you gave was probably the best that one could summarize it. Let's keep it at that.